Let's do a move now. Jim Lebenthal, you bought CRH. Tell me what it is and why.
Yeah, so I'm not expecting a lot of people, Scott, know what CRH is, but perhaps you've heard of Vulcan Materials or Martin Marietta Materials or Eagle Materials. This is that type of company, except it's bigger than all of them. It's a materials company. It's building products. It's concrete, asphalt, aggregate, that sort of stuff. It is about 2/3 here in the U.S., about 1/3 in Europe. And when you think of the things that are going to be built, particularly as interest rates come down, so I'm not just talking residential homes. I'm talking infrastructure, paving roads, building factories, not just here, but also in Europe. That's where this company comes in. Now, I know a lot of people haven't heard the name, but as I said, it's bigger than those other companies, and it does have the potential in the next year or so of being added to the S&P 500, which obviously would be a boost. But more than anything, this is my type of company, Scott. You know this. It's building things. You know how I feel about CapEx here in the U.S. and abroad. This is the sweet spot of where I want to be.
Do you not own the others that you mentioned because it's a scale game in your mind and you have what you just said was the biggest?
Actually, a fabulous question, because scale does matter in this business because everything's distributed. When you think about it, there's not like one giant mine from which you go get cement and asphalt and all that stuff. It's very distributed around the world, so scale does matter. That is part of the reason. The other reason, Scott, is those other companies are actually a lot more expensive than CRH. They've been fabulous companies. They've been fabulous. To a certain extent, I've missed them. CRH gives me a way to get in.
I mean, it's up 21%, this name is, year to date.
Yep. Yeah. Gives me a pause. Gives me a pause, but you know, I thought the Home Depot reaction the other day was a very big tell about the space in general, building things in general. Not a great report, and yet the stock kind of hung in there, actually went up, which is, I think, the market's way of saying anticipate. Anticipate that rate cuts are coming and that CapEx is going to pick up accordingly.
Yeah, I wasn't even bringing that up, at the fact it's up better than 20% as a point of pause, but more of a, okay, here's what we may consider to be an under-the-radar name, because even though it's the largest in the space you described, we haven't talked about it before, but it popped up enough on your radar to say, okay, I like it, it's large, and it's done well.
Yeah.
Not a negative that it's up 21%, but almost validation that this is a name that you need to take into consideration.
You're great at psychoanalyzing me. You know how I roll. So.
All right, let's hit Deere then, which is yours too, correct? Yep. Because it crossed back above its 50-day today. They had earnings. They beat. There's the stock. It's up 7%. You want to hit this one?
I'll hit it quickly. I mean, expectations were so low that they were easily surpassed. Look, there's a long road ahead for Deere. The ag cycle, we hope now, has troughed. That's what the hope is. Fingers crossed. Let's see going forward, but it's awfully cheap at this level. So hopefully the ag cycle has troughed.
Yeah. No Deere for you. No. Cat, by the way, is higher today.
Nope.
Probably in sympathy a little bit with this one too. Neither of these names?
Nope.
Why?
We want to be a little bit more defensive industrial, so we own a lot of waste management. We own some rails. We own some aerospace defense companies.
Rails are defensive?
No, I think, well, from an earnings perspective and from a yield perspective, yeah, they are. And especially, you know, we own some from Canada down to the United States just because.
Obvi.
Oh, yeah, you know. But I think Lockheed Martin is a name, like even Rockwell and Tenet and some of these aerospace names that, from our portfolio standpoint, I want to be a little bit more domestic in my holdings.
How do you see these?
The industrials?
Yeah, Cat, the Deers.
I mean, I'm from Wisconsin. I like farming. But here's what I would say about,
do you own Oshkosh?
About farming, Oshkosh B'gosh, about farming equipment. We went through a cycle where we had the breadbasket of America that drove a lot of upside in farming equipment. I think we came back off of that. There was some reset that needed to happen in supply and demand, and I think that has occurred. I would actually agree with Belsky on this.
Oh.
I would be more defensive in industrials because companies like Cat and Deere are very cyclical. It's big machinery. It's the durable goods of businesses. It's the durable goods of industry.
Here I am sitting here hoping that you're going to tell me the ag cycle is troughed. Look, I actually agree with you about the earth-moving equipment, but let's face it, the ag cycle has been terrible. Crop prices have been low. They just haven't been selling these combines and tractors.
There might be a contrarian play here, though, because AGCO came out. There's a great company, AGCO, AGCO. We own a little bit of it, and they just missed earnings. But you want to buy a company like that after that words, because from a return on equity perspective, that company just kills it from a long-term side.